Welcome back. You're watching Market Sense. Time now to get a fundamental view of the equity markets. We've got Gaurang Shah of Geojit BNP Paribas now joining us on the show. Gaurang, to begin with, we've seen a tremendous amount of strength return to the equity markets, but would you worry that this is possibly going to be short-lived, and after a while we're going to go back to worrying about, the bigger challenges that the Indian markets face?
Yes, George, good afternoon to you. Well, immediately in the near term, we guess with the steps taken by the ECB, the short-term negativities are pushed behind, but yes, there are all chances that this is likely to resurface like earlier times that we've seen. So as of now, we are in a very well-placed, led by the global markets, Asian markets, and of course we've seen the strength into our markets sustaining. Just a while back we had some correction from the higher levels, but again we have regained those higher levels. So we are in a good shape as of now, but as we speak, incremental upside seems to be quite limited, because by and large the domestic issues are not done away with. They still persist, and that is the clear and present danger. And in terms of the fuel price hike that was by and large anticipated but now put to rest by the oil ministry, we have seen concerns, and of course if this is the way it continues, then I think the subsidy burden is going to become larger and larger, and thereby the government will have a lot of issues in terms of funding it. So I think from here on, 53.45, 53.65, anybody's guess, but sustaining at those levels is going to be very, very difficult. And of course, not to forget, George, I think with this kind of funding that has been there, and then of course if QE3 happens, then you have more liquidity coming into the global markets, whereby you will have the risk-on mode again coming in, and you will see some surge not only in the equity markets but also in the commodity markets.
So Gaurang, let's talk about the latest development. The fuel price hike, which was expected, has now been put on hold, on the back of which obviously most of the oil marketing companies are reacting negatively. Do you think it's a dicey play to be invested in some of these names? Would you just avoid them?
Well, amongst all the three OMC names, we are slightly positive on BPCL, but not at current levels, possibly on dips, and with the kind of under recoveries that they are already having, whether it is LPG, kerosene or diesel, I think with the risk-on mode that I spoke about in commodity markets coming in, you might see even crude going on the boil again. And in case if your rupee-dollar equation has to, deteriorate further, if rupee has to depreciate against the dollar further, then it's all the more problem, because the under recoveries are going to swell. So as of now, it is better to avoid the space.
Okay, speaking of the oil marketing companies, let's hear out R.S. Batula, the chairman of IOC, who talks about the massive under-recoveries that the company is sitting on the back of this move.
Indian Oil is losing currently 16 crore rupees per day. We had lost 950 crores in the first, up to June, and thereafter we have lost in the last 1 month. Maybe this 16 crore continues for some time. It may be another 300 crore. What I can admit that the under recoveries on diesel have also been increasing. You see, the borrowings are around 88,000 crore. They had gone to 90,000, and since the last tranches of the under recoveries which were due in last year, they have already been paid by 31st August, and we haven't received the sanction for the under recoveries of the first quarter. So this borrowings will be going up now. We have a deficit of more than 5,000 crore rupees every month.
Okay, startling figures for some of these oil marketing companies, but you are seeing a mild recovery coming into the stock prices. Gaurang, let's focus away from this and talk about the banking sector, one which was considered a very safe one, where investors put their money. Now, lots of analyst reports saying that credit costs will remain high, asset quality concerns prevail. Are there any banks that you believe from the private or public sector that are insulated from these risks and that one could look to buy into at these levels?
Avan, insulated, no. I mean, whether it is PSU banks or private sector banks, I think they are equally exposed. Maybe to a certain extent, private sector banks are less exposed to the downside risk. You will see some correction coming in, and the most important thing is the asset quality, which seems to be possibly deteriorating, especially for the PSU banks, purely because of the larger part of the loan book is exposed to the agri side, the state electricity board, etc., etc., real estate, telecom, aviation, infrastructure still remains an issue as far as debt restructuring is concerned. So 17th September we'll have the RBI credit policy review, and over there as a brokerage house we do not anticipate or expect any kind of easing of interest rates, whether it is repo, CRR, or as a matter of fact SLR. So there will be some concerns, and given the kind of performance that the banks have delivered, well, if you just compare the PSU banks and the private sector banks, then over the last 2 or 3 quarters, private sector banks have delivered a fair bit of stable numbers. So in the list of our buy recommendations, we do have Axis, ICICI, Yes Bank and IndusInd Bank as our preferred choice. And I think this pullback that we've seen, because I think about 2 days back we saw the bank Nifty and the Indian banking sector underperformed to a great extent, and whichever sectors underperformed in this kind of a pullback, you will see a massive short covering happening, and that will lead to much more upside. So one should wait for a slight bit of correction while buying into the private sector banks, and PSU banks as of now we are avoiding.
Right, Gaurang, stay with us. We'll just come back to you in a moment. Now, today is day 2 of the Interministerial Group's review of the mining progress across captive coal blocks, and the pressure on private steel and power players is only intensifying. After all, it is their last chance to explain their stand, or else they run the risk of their blocks being deallocated. Companies like Monnet, Ispat, JSPL, Tata Power, Hindalco and GVK are all in the dock.
So Gaurang, in light of this, what would be your view on some of these names?
Well, the bad news just doesn't seem to die, and every day you have some new name coming in, some individual, some corporate, some politician, etc., etc. So, you know, when you have uncertainties prevailing, when you have flows, negative news flows still coming in, and, you know, purely if you gauge by the size of the scam that we are talking about on Colgate, I think there will definitely be much more names that will be coming out of the closet. So it's better to stay away as of now unless you get some clarity.
Gaurang, a quick word on gold prices climbing to a record high. Yesterday it's tempered off, but is it a good investment opportunity?
Well, I have been positive on gold for the last many years, and I continue to remain positive. And Avan, if you recollect, you know, the more problems in the global economies, the more fear of an eventual breakup that might happen in the Eurozone, and possibly sovereign risk going much more higher. We believe that yes, and of course demand from across the globe from various ETFs, gold ETFs, that has been propping up the demand. We believe that there will be much more higher levels, but there might be intermediate correction. But those corrections in the gold prices we definitely identify as a buying opportunity, and of course it's a natural commodity, and with the kind of data points that have been emerging in terms of reserves which are there and the consumption levels which are going up consistently, supply side issues are there. 15 to 20% or even more depending upon the risk profile of an individual, we believe that there should be an allocation in a portfolio of about starting with 15 to 20% and increasing if the risk appetite is more.
Right, Gaurang, thanks very much for joining us on the show with your
Always
view
a
on
pleasure.
the outlook for the markets.